Hey everyone, welcome back to the channel. If you're into crypto, Bitcoin, or just watching the financial world flip upside down, buckle up because today we're diving into something massive. The title says it all. The IMF just changed everything for Bitcoin and crypto. That's right, the International Monetary Fund, the big boss of global finance, just dropped a bombshell in their latest financial stability report. And no, it's not all doom and gloom. This could be the signal we've been waiting for that crypto isn't just surviving, it's reshaping the entire game. I'm talking about a $305 billion market that's got the IMF sweating. Yeah, you heard that right. Stablecoins, the steady backbone of our wild crypto world, are now on the IMF's radar as a potential time bomb for traditional finance. But here's the twist. This warning isn't just fear-mongering. It's an admission that digital assets are too big to ignore. Stick around as I break it down. What happened, why it matters, and how you can position yourself to win big. If you're new here, smash that like button and subscribe for more crypto breakdowns. Let's jump in. First, a quick history lesson because context is king. The IMF, think of them as the world's financial referee, has been side-eyeing crypto since day one. Back in 2018, they called Bitcoin a Ponzi scheme and warned governments to crack down. Fast forward to the 2022 crash, and they doubled down, saying crypto could destabilize economies if left unchecked. But crypto didn't listen. We roared back. Bitcoin hit new all-time highs, Ethereum upgraded, and now we've got trillions in market cap. The IMF? They've been slowly warming up. In 2023, they started talking about central bank digital currencies, or CBDCs, as a way to compete with us. And just last year, they even praised El Salvador's Bitcoin experiment as a bold move. Grudgingly, of course. So, when the IMF drops a report on October 14, 2025, calling out stablecoins as a threat, it's not just noise, it's evolution. They're admitting crypto's infiltrating the system. Let's unpack what they actually said. The bombshell, what the IMF said. All right, core of the story. In their financial stability report, the IMF zeroes in on stablecoins. These are cryptos pegged to the dollar, like USDT or USDC, designed to stay at $1 no matter what. The market exploded to $305 billion this year alone. That's bigger than some countries' GDPs. And it's not just retail traders anymore. Big banks like Goldman Sachs and Citigroup are jumping in, building their own stablecoins. Even Europe's cooking up a euro-backed one. But the IMF's freaking out for three big reasons. Number one, threat to traditional lending. Stablecoins hold massive reserves in U.S. treasuries and bank deposits. If everyone rushes to cash out, like in a bank run, it could force fire sales of those assets, spiking interest rates and choking credit for everyone else. Number two, messing with monetary policy. Central banks print money to control inflation, right? But if stablecoins tied to the dollar flood emerging markets, they could undermine local currencies. Imagine Argentina or Turkey, already crypto hotspots, bypassing their shaky fiat entirely. The IMF says this could make it impossible for banks to steer the economy. And number three, the run risk on safe assets. Remember Athena, the third biggest stablecoin? It lost its peg last weekend amid market chaos. Multiply that by $305 billion and boom, global ripple effects. The IMF warns this could drag down bonds, repos, even force central banks to step in with emergency liquidity. Scary stuff. But wait, here's the game changer. The IMF isn't just yelling ban it. They're urging countries to recognize digital currencies as part of the new reality. That's a huge shift from their old shut it down vibe. It's like the establishment saying, okay, crypto, you're in the club, but play by our rules. This isn't the end of crypto. It's the beginning of regulation, and that's bullish long-term. Implications. How this rocks Bitcoin and crypto. Now, let's connect the dots to your wallet. First off, stablecoins are crypto's killer app. They make trading seamless, enable DeFi lending, and bridge fiat to blockchain. If the IMF's pushing for oversight, expect clearer rules, like the U.S. Genius Act that's already paving the way for reserve-backed tokens. That means more institutions piling in, pumping liquidity into Bitcoin and alts. For Bitcoin specifically, the IMF's report ties into their separate warning on global debt hitting 100% of GDP by 2029, the highest since WW2. Sound the alarm! With fiat crumbling under debt mountains, Bitcoin's scarcity shines brighter as the ultimate hedge. No central bank can print more BTC. While stablecoins get scrutinized, BTC could decouple and moon as the digital gold safe haven. Broader crypto, tighter regs mean less Wild West, more maturity. Think, ETFs exploding, nations like the UAE and Singapore leading with pro-crypto policies. But watch for short-term dips. FUD from this report could spook markets. The IMF even flags rising odds of a disorderly global correction. So volatility ahead. But the trend is up. What you should do? Investor playbook. So what's your move? If you're holding BTC, hodl tight, it's primed for that hedge narrative. Diversify into quality stablecoins like USDC that are fully audited to weather any storms. Explore DeFi yields, but DYOR on risks. For newbies, start small. Get a hardware wallet, learn about the Genius Act updates, and follow regulators. Not to fear them, but to spot opportunities. Governments recognizing crypto, that's institutional money flooding in. And governments? IMF's call to action means more CBDCs competing, but also hybrid systems where crypto thrives under rules. Win-win if you're early. I've been in this space since 2017, ridden the crashes and pumps. This feels like 2020 all over again, pre-bull run. Wrapping up, the IMF didn't kill crypto. They just handed us the keys to the kingdom. Stablecoins at 305B? That's validation. Risks? Yeah. But so was the internet in the 90s. Bitcoin and crypto aren't going anywhere. We're changing everything. What do you think? Bullish or bearish on this? Drop your takes in the comments, like if this fired you up, and subscribe for weekly deep dives. Hit the bell so you never miss a beat. Thanks for watching. Stay sovereign, stack sats, and I'll see you in the next one. Peace.